technical analysis. Now, the technical analysis is where we do our normal candlesticks, where we start using our candlesticks, our market structure, and so on and so forth. So what do we mean by technical analysis? So technical analysis just simply involves the studying of historical price data and using your chart and technical indicators to identify the trend and the potential future movement. So basically, your technical analysis is just basically you using what has happened in the past to judge what's going to happen in the future. That's what it simply means. So when you go back to your chart, you look at what happened yesterday and look at what's happened, the structure the market has created yesterday and day for some weeks back, some months back, years back. And now you use this data that the market has printed for you in the previous times and use it to judge what's going to happen in the future. Now, like you always hear this word when people say history repeats itself. That's the same thing that happens in the financial market. What happened yesterday is going to happen today. What happened today is going to happen next tomorrow. It might just be the opposite way. If market buys today, it might sell tomorrow. But you're still using the same structure, the same analysis, the same everything to judge what's going to happen in the future. Now, this is basically what technical analysis is all about. So now, and this is where we'll start talking about the type of charts, market structure, highs and lows, higher highs, lower lows, and so on and so forth. So the key element, so move straight to the key element of technical analysis. So first of all, when you talk about technical analysis, or when you talk about charts, let's talk about charts. We have different ways at which traders can read the financial market or read their chart. We have the line chart, we have the bar chart, we have a lot of them. So I'll be sharing my chart with you. Okay. So when you come here, when you come to this side, you see a list of them. We have the bar chart. When you click on the bar chart, this is what the bar chart looks like. When you use your candlestick, we all know what the candlesticks look like. When you use your line charts, see what the line chart looks like. Like we have a lot of them, step lines, we have a lot of them. Like you can use this to analyze the market. But we retail traders, we prefer using the candlestick. Why do we prefer using the candlestick? Because the candlestick has more data than every other type of chart. It has more data. You can easily interpret it. That's why we use the candlestick as retail traders. Okay. Now that's that for the type of chart. We have different type of chart like I just showed you. Now we'll move to support and resistance. We move to support and resistance. So I'll be doing a quick explanation of support and resistance before we start moving out to trend and so on and so forth. So when you hear the word support and resistance, what does this simply mean in the financial market? Now, everything that happens in this market is basically off demand and supply. It's basically off demand and supply. Everything that happens in this market. Why? Because when we have, okay, let's use this two line, for instance. Okay. So when we talk about support and resistance, we're actually talking about we're talking about market structure in a nutshell. So when you hear the word support and resistance, it simply means what's holding price from going up and what's holding price from coming down. Now, so now let's use this chart for instance. Let me use this as an example. Let's say this is our resistance or R. The R is for resistance, and this is our support. So what does the support and resistance simply means? So your support is basically holding the price from going below. Your support is holding the price from going below, and your resistance is holding the price from going above. Now, this is the format which markets move. Now, I'll draw another line up here. This is the format which the market moves. Let's draw another line up here. Now, this is the format with market moves. So what happens if price goes up, comes back down, goes up, comes back down, goes up. Now, this is how the market moves. The market moves based on support and resistance. Now, like I said, we're using previous data to judge what's going to happen in the future, right? So now let's say price was actually moving down like this, like this, like this. Now look at this chart I draw and look at this candlesticks below. Look at this. You can see they're the same thing, right? Now, how do we use this to analyze the market? And when you hear the word support is simply telling you that when you hear the word resistance is only telling you that I'm holding price from going above. And when you hear the word support, I'm holding price from going below. Now, let's use this for an example. When you're inside your house and you jump up and your ceiling drops, you hit your head on the roof and you come back down, it simply means your ceiling is resisting you from going above the roof. And now when your ceiling resists you from going above the roof, you land back to the ground, right? Now, when you land back to the ground, your ground actually holds you down from going under the ground or underground, right? Now, that's what your resistance actually, your support actually stands for. So your support is holding the price from going below. Your resistance is holding the price to go from going above. Now, when this happens in the market, what do we expect next? How do we do this? We expect price to fail either the support or the resistance, and then we'll continue with any direction at which the market breaks out to. So now, like we can see from this zone here, let price broke out this resistance, and now we expected price to come back test resistance and keep going up. Now, this is how we make this is how we make trading decisions in the market. Now, note, when your resistance is being used already, when your resistance fails to hold price, your resistance becomes your new support. So when this resistance fails to hold price, it becomes your new support. Why does it become your new support? Because price will actually create another high in the market and then retrace back to this low. And then we'll do what? Retrace back to your resistance. Your old resistance will now become your new support, and your new resistance will be created above. Now, in this form, market keeps going up and up and up. So now, for me to make this very, very clear to you guys, this will take us now to market structure. This will take us straight to market structure. So when you hear the word market structure simply means how does the market forms? How is the market form? How does the market move? What's the structure? What's the form you are seeing in the market? And when you look at this market, the market always moves zigzag, right? Zigzag. Now, this zigzag that the market is moving at, it's actually market structure because it's creating new structures above and new structure below. Are you guys understanding me?
Yes, sir.
Okay. Now, when you hear the word market structure simply means the way at which the market is moving, the way at which the market has printed in the past. Now, when you look back, the chart you are seeing is all structure. It's all structure. Like if you look at your house from outside, what do you see? You see a building. What makes the building? The four corners of that house, the ceiling, the roofing, everything makes the structure of the house. So when you look at the financial market, these candles and these lines you're seeing is the structure of the financial market. Now, how do you understand this structure? This will now take us to we understanding the highs and the lows in the market because the market moves in high and lows. So now let's give an instance. Let's use a plain. Now, first of all, we know we talked about trend in the market. We talked about trend. We talked about bullish trend. We talked about bearish trend. We talked about uptrend. I'll talk about downtrend. I remember we talked about market moving in three directions. Is it that market moving in the upside, which is the uptrend, or moving to the downside, which is the downtrend, or market is stagnant in a particular direction, or it's moving just in a particular direction. It's ranging in a particular direction. Now that's what we call consolidation. So now I'll draw a chart right here from price creating. Now, this is clearly price moving in a downtrend, right? As we can see. Okay, now you can see from this chart I draw, right? Now this is the three direction at which the market moves. Now, when you hear your support and resistance, your support and resistance is actually in two ways. Is that your support and resistance is trending, or your support and resistance is ranging. So when your support and resistance is trending downward, it's respecting highs and lows in a down format, like going down, creating highs and lows, downwards, downwards, downwards. Now, when your market is creating structure in a particular direction, that is, we have this low here, we have this high here, price come back here, hit it, reject back to the support, come back to the resistance, come back to the support, come back to the resistance, and comes down to the support, then finally breaks out. Now, this is a ranging market where it has no particular direction. It's just in one zone, creating highs and lows in one particular zone. Now we have the uptrend, we have the uptrend support and resistance. Now, this uptrend support and resistance simply means you have a particular resistance above and you have a particular support below, where price keeps testing the resistance and rejecting back to the support, testing the resistance, rejecting back to the support, testing the resistance, rejecting back to the support, testing the resistance, and driving back to the support. Now, these three lines I draw, like the downtrend, the ranging, and the uptrend, they are all in support and resistance formats. But you need to understand how these logics work before you can say, okay, yes, I'm analyzing the financial market. Now, this takes us back to what we call highs and lows in the market. Highs and lows in the market. So when you hear the word highs and lows in the market, what does it simply mean? In a downtrend, when markets keep creating lows lower than the previous low. Okay, now let's use the downtrend for an instance. Can you guys see my screen boldly, right? It's bold, right? It's bold enough for you to see, right?
Yes, sir.
Okay.
What's up?
Okay. Now we have this structure clearly in the market, right? We have a downtrend. Let's start from the downtrend. Now we have this high, we have this low, we have this high. So we have this high, we have this low. Now, when we talk about market structure, this is what we talk about. The highs and the lows are what we look at as structure. The highs and the lows is what we look at as structure in the financial market. So now, when the price keeps going low and low and low and low, we expect price that we always say price is in a downtrend, respecting the previous low and respecting the previous high, in the sense that this low, this high, this high is lower than this high, and this high is lower than this high, and this high is lower than this high. In this scenario, we say the market is in a bearish trend, is in a downtrend, a bearish trend, right? Price going down below. And now what's happening in this structure here? Price is taking out the previous structure, taking out structures to the downside, meaning price is actually in a downtrend. Now, how do you look at this as a price coming to the price in a downtrend? Now we have this high here, we have this low, we have this low, we have this high, which is lower than this previous high, and we have this low here that is lower than the previous low. I'll come again. We have this high, we have this low, right? Now we have another high, but this high is not higher than this one. It's actually lower than this one. This high is lower than this high, and this high is lower than this high, and this high is lower than this high. In this form, when the highs are being created lower than the previous highs, coming down and down and down. We call this a downtrend, meaning price is breaking structure to the downside. Now, if we are to trade this in a support and resistance format, now let's draw this. Let's use a plain. Okay, I was talking about the downtrend. Let me look for a downtrend so I don't confuse you guys. Okay, this is a perfect example. Now observe these charts, right? It's clear that this chart is in a downtrend, right? It's very clear that this is in a downtrend. Okay. as you can see right here. Now observe this trade, this chart, sorry. Observe this chart. As you can clearly see, the price keeps respecting the highs and the lows. Coming, where's this guy? Now we have our high here, right? Now we have our low here. We have another high here. We have another low. And we have another high here. We have another low. We have another high. We have a low. We have another high. We have a low, we have a high, we have a low, and we have another high. Now, this is clear that market is actually in a downtrend. Now, how do we confirm that, yes, truly, this trend is actually a downtrend? We can see clearly without even marking anything that, okay, the market is dumping, right? It's selling. So how do we define it and how do we read this chart as a downtrend? Not just about looking at it saying, okay, yeah, since the price is coming down, we know that the price is coming down, we know we're looking out for sale, right? So I don't want to waste our time this night. Once it's 8:30, we'll be done with this class. I'll just try as much as possible to explain the downtrend, and maybe next week we'll explain ranging, and our next class again we'll take out the bullish trend, right? So let me quickly break this downtrend for you. Now we have structures. Now this is a downward structure, right? Price coming down, respecting the highs and the lows. Now this is our support. This is our support. Our S is for support. Bring a bigger number. The S is support and the R is resistance. Now, you can see this is our support, and this is our resistance, meaning price keep respecting the support. The support is holding the price from going, sorry, these are resistance. Okay. Sorry. Now, this is our resistance and this is our support. Like I said, our resistance holds the price from going above and our support holds the price from going below, right? And as we can see, the market respected this in this form, coming down and coming down and coming down until we got to this level right here. As you can see from this chart here, we got to this level where price refused to respect our resistance. And then what happened next? Price started buying, right? So now let's explain this clearly. So now this is our high. This is our high, right? This is our first high. The first high we had in this market before price started selling was this guy. And next we had this high here. And next we had this high here. We had this high here. And we had this high. And next high was here. The next one was here, right? Now we have our low. This is our first low. Then we have another low here. Then we had another major low here. I'm sorry, we had a major low here. We had another low here. That is the then we had another low right here. Okay, we still had another high here, and we had another low. This was the last low market created for started buying. Okay, now you can see the way I drew this guy, right? Are you guys with me?
Yes, sir.
Okay, now you can see the way I drew this stuff, right? Now this was the high. Well, this was when the highest. This was when price started selling from. This was the last high price gave us. Now we call this our high. We call this our low. We call this our high. We call this our low. We call this our high. We call this our low. Now, if you are reading this in a normal chart, normal when we traders as traders were talking, we call this our high. We call this our lower high. Mark the word. We call this our high. We call this our lower high. Why do we call this our lower high? So can someone tell me? Why do we call this our lower high?
Because it's not to the first high.
Exactly.
The previous high.
Exactly. this high is not up to this high. It's actually lower than this high. And the next high we have was this one. And this high is not up to this high. And now it's this high is below this high. Now, price is moving in this format. Now, the next high we had was this guy. And this guy is lower than this high. So when we're reading this chart, we actually say we have our high, we have our lower high, lower high, lower high, lower high, lower high, lower high. Now, when you come to the downside, we say this is our low, this is our lower low. Why is this a lower low? Because this low is lower than the previous low. So we call this a lower low. Now, next after that, we have another lower low. Why is this a lower low? Because this low is lower than this low. Then we had another lower low here. This low is lower than this low. We had another lower low. This low is lower than this low. We have another one here, lower than this one. And that was the point where price gave us the last low. And what happened next? We fall into a ranging market. Let me mark that out for you. We fell into a ranging market from this zone here. As you can see, we fell into a ranging market. This zone, this is a ranging market. Price came here, reject, reject, and finally broke out. So from our next class, we'll be talking about this particular zone before we move to the upside. So I'll take this again one more time before I welcome you guys' questions. So we have our high, we have our lower high, we have our lower high, we have our lower high. Why is this called a lower high? We call this a lower high because this low is lower than the previous high, and this low is lower than the previous high, and this low is lower than the previous high. In this format, we have markets going down, respecting these highs. You see, price did not fail this high. As you can see, this resistance keep holding the price from going above it. The moment price failed this resistance failed, what happened next? We started buying, right? As you can see from here. Now, resistance holds price from going above, and support holds price from going below. So the moment your support fails or your resistance fails, you should be looking out for you should be looking out for the opposite direction. So if market fails your resistance, you just expect price to keep going up. If it fails your support, you expect it to keep going down. So now in this form, we had our resistance trending respectfully in a downtrend, resistance and support in a downtrend respectfully, creating lower highs and lower lows, lower high, lower low, lower high, lower low, lower high, lower low. In this format, we can clearly say we're actually in a downtrend or a bearish trend. Guys, I think we'll be stopping here for today. And our next class will move straight to arranging support and resistance. Okay, someone dropped the question in the chat box. Okay, please, I would like to get the recorded. Yeah. Okay, yeah, I'll be dropping the recorded section on my phone. Sorry, on the group, on the WhatsApp group. The recorded section will be dropped on the WhatsApp group after the call. So this is just a clear explanation of what a support and resistance means in a downtrend. Okay, good. Yeah. What support and resistance means in a downtrend. So next class, we'll be talking about ranging support and resistance, where we'll go back, we'll do some back testing, go back previous history and check out for where the ranging support and resistance is. So guys, right now I'll be leaving you guys to ask me questions. So I'm really open for your questions. Any question you have concerning what we've talked about today, starting from the fundamentals to support and resistance, that's the technical analysis. Okay. I'm open for your questions, guys.
Hello, sir.
Yeah, I'm here with you, Favor.
Okay, you said when the candlestick passes the resistance, that the resistance will become the new support.
Yeah, to become your new support.
But can it still will I say pass that support and go down more?
Yes.
Like pass.
Okay. Now let me get your question right. Let me get your question right before I answer. Now I'll have to draw some example here for you. Let me give you like 3 lines or 4 lines. Yeah, 4 is okay. Now these lines I'm drawing is actually your support and resistance, right? Let's assume this is your support and resistance. Now let's say we're in a downtrend, right? Okay, price started moving from here. Now range, this is your support, this is your resistance, your support, and price failed your support. Your support becomes your new resistance. It becomes your new resistance. And when it fails this new support you have again, this support here, okay, let me label it so I don't just. So this is initially our resistance where price started selling from, right? and this is our support, right? Now, the moment this resistance fails and this support fails, your support becomes your new resistance. It becomes your new resistance automatically. Now, let me give you an example with a live chart. Let me give you an example with a live chart. Okay, now look at this market here very well. You can see this chart clearly, right? Now, price started moving from this zone to this zone, right? Ranging in this zone, right? Now, what
Yeah.
happened next? Price broke out from this level, as you can see from here. So let's say this is our resistance. Text. Okay, this is our resistance, and this is our support. As you can see clearly, right? Now, our resistance failed this price at this zone, as you can see here. Right? It failed it at this zone. What happened next? Price came back down to test our new support, because now once this resistance fails, it becomes a new support. It becomes a new support. You see, right? It becomes a new support. And what happened next? Now, observe this guy to the left side. Now, price came back, test it, because it's now a new support. Test it, and then started pushing up. Now, observe what happened here again. Okay, now we have another support and resistance around this zone. Around this zone, right? You can see it. This is another support and resistance. Very small one. This guy here is a support and resistance. Why? Because price kept ranging in this zone, right? Keep ranging in this zone. Let me zoom it so you can see it clearly. You can see price keep ranging in this zone, creating resistance, support, resist, support, and then broke out this resistance, right? To the upside. Now, price finally came back to it after a very long period of time. It went up, broke out, right? Broke out, and later came back to it, as you can see. You can see it, right?
Yes, sir.
Price came back to it and then pushed up. So once your resistance fails, always expect price to come back to it. It's now your new support. So any support that fails you, becomes your new resistance. And any resistance that fails you becomes your new support. Do you understand the concept now?
Yes, sir.
All right. Any other question? So, Favor, I hope I've answered your question, right?
Yes.
Yes, sir.
Okay. So, any other question?
Yes, I have.
Okay, Mr. Raphael, with you.
Okay. For example, I've
Yes.
just invested my money in the market.
Okay.
Then suddenly we started having the market started moving. We're having this lower high movement.
Okay.
Yeah. What does it entails? What does it mean? Does that mean that you're actually losing money?
Okay. Now, when you invest in the sense that you fund your money to your broker, right?
Yes.
Okay. If you don't place a trade, nothing will happen to your money. Nothing.
Okay. Okay, the situation I'm talking about now that you've placed a trade already,
Okay.
and then we have this movement of
Okay.
lower high. Yes.
All right. Okay.
So
Mr.
what does
Sunday,
it mean?
I'm coming. Mr. Sunday, I'll give you room after we answer Mr. Raphael's question. So now, Mr. Raphael, this is what it means. Now, let me give you an example of what happened to me today in the market. Let me go. I think I cleared my chart already. Now, I sold from here today. Where's my short position? Okay, I sold from here today. I was targeting this low as my take profit, right? And my stop loss was around this zone. I think, yeah, this zone, this high right here. Now, I sold from here today. I entered my trade from here today, and I was risking just 5 pips. That's 5 pips SL for my trade. And what happened next? Immediately I took this trade, it came down. I was in profit already. And what happened next? Price came back up and took me out. And now you can see it's already selling. So now this is what happened. When you place your trade on your account, you can actually define what you want to risk on that trade. You can define what you want to risk. And what I mean by you can define what you want to risk. Let's say you have $100 in your account and you want to trade, you want to place a trade, you can actually determine, okay, I want to risk just $5 from this $10, this $100 I have in my account. Now that's where your stop loss comes in. When you put your stop loss, it's actually telling your broker that when price gets to this certain level, take me out of this trade with the loss I've gained already, the loss already. Take me out of this trade with the loss. Now you can see this black spot on my chart here, right? What it simply means is once price gets here, my broker will automatically close me from that trade. So I've lost that money I actually invest at that moment. So okay, let me use this for instance. From the $100 I have, maybe I have $100 in my account, right? And now I enter this trade from here. I'm telling my broker, once price gets to this level here, close me with this trade with a loss of $5. So I still have $95 to carry on my trade later on. Do you understand? So you can actually define what you want to lose in a trade. So it doesn't mean the only thing that can happen, that can go wrong, is if you place a trade without using your stop loss. If the market keep going against you, it will keep going against you and going against you until your account has nothing in it again. So we always advise traders, no matter how sure you think your trade is, always use your stop loss, because the market is likely to hit your stop loss. It's a game of probability. We don't know where the market is going. So you always need to be very, 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 very cautious of what you are doing in the market. Make sure you use your stop loss. It's very, very important. So whenever you're placing a trade, first of all, you need to define your risks. When I say define your risks, know how much you're risking on a particular trade you're taking and how much is your return. So now if this trade would have gone my way, maybe I risk $5, I'd have making like $50 on the same trade if it has gone my way with $5 risk. So you can define your risk. Have I answered your question, Mr. Raphael?
Yes, you have. Thank you so much.
You're welcome. So, Mr. Sunday, you can ask your question, sir.
Good evening, sir.
Good evening, sir.
I really appreciate you for your efforts.
All right.
The good Lord bless you.
Amen. Thank you, sir.
Yeah. My own question is that I traded synthetic.
Okay.
That's what I love trading.
Okay.
But most times when I draw support and resistance,
yeah,
I will enter the market, and sometimes I'll be in profit. I'll be in profit, but when the market starts reversing to my entry, immediately it takes me out of the market.
Start going your direction.
And it will not get to my resistance. Immediately it takes me out of the market. It will now go to my direction. I was not thinking that maybe my drawing of support and resistance, maybe I'm not drawing it well. That's why I'm asking you, is there a way that I need to be drawing it?
The normal support and resistance is what you should draw. Now, how do you draw your support and resistance? Now, let me show you something.
Yeah.
Okay,
sir.
Well, the question you asked, I have two answers to your question. Now, the first answer is you need to understand your structure first. Structure. What do I mean by structure? Your highs and lows that we just talked about. Now, when I draw this high and I draw this low, what are you seeing? You are seeing a support, a resistance right here, and you're seeing a support right here. Right? Now, when you have your highs and your lows, that is your support and your resistance. Now, let's go to a bigger time frame and let me show you something. Okay, now this is our high right here. This is a high right here. And this is a low right here. Now, this is your support and resistance. This is your support, and this is your resistance. What does this simply mean? Now, why I actually took the trade I took this afternoon was because this market is inside the range. Now, it's inside the high and the low of this market. Now, the market is actually in between. Now, what was I expecting? The market is actually in a bullish trend, right? It's actually buying. Obviously, it's buying from here. The market is in a bullish trend. Now, I was expecting price to come down to this resistance, right here, to this support right here, sweep this liquidity, and then come back up. That was what I was expecting to happen today. You get? Now, what happened to you is two ways. Is that you were swept out as we are used as liquidity. Because when we get to the advanced level, we'll talk more about liquidity in the markets. Liquidity is basically your support and your resistance, because those are the place where the market makers, what we call market makers, they look out for these zones where you place your money, because if you enter this trade from here, you might say this is double bottom, right? I guess that's what
Yes,
you
sir.
see
Yes, sir.
sometimes. You see a double
Yes,
bottom,
yes,
right? You see a double
yes.
bottom. But do you know what the market makers see? They see money right here. So what would they do next? They will come back here, take this money, and then move up. So that's exactly what's happening to you. They will come here. They know your stop loss is right here. They will come, hit your stop loss, take your money. Because once they hit your stop loss, the money is out of your account automatically. It comes to them.
Yes, sure.
Now, when they take it out from you, from your account, then they go towards the direction at which they are supposed to go, that you know that you're going to go. So now, how do we take this trade? When we get to that level of liquidity, we'll explain it better.
No problem, sir.
Yes, sir. So I'll just tell you, you should always mark out your support and resistance as usual, as normal. Then you should know where the liquidity is. Understand liquidity. If you don't understand liquidity, you just keep losing money in the market. So now,
Yeah.
when we get to the advanced level, we'll start talking about where the liquidity, because we have different type of liquidity. We have the trending liquidity. We have the trending liquidity, like market moving downwards like this. It's liquidity. Now, these are now liquidity. We have the ranging liquidity. We have ranging liquidity, and we have equal lows and equal highs liquidity. So when you see equal lows, or yeah, you call double bottom, some people see double top, and they say it's double top. I'm selling once price get to the top like this. It's the double top. No, it's liquidity. Price will sweep it. When price sweep it, it will, you know, be like, these guys, they sweep me out, and now the market is going my direction. Yes, the market will go your direction, but basically, it's basically liquidity they took out. So when we get to liquidity, we'll explain that clearly. All right, so I've answered
Thank you,
the
sir.
question. All right, sir.
Yes,
I've answered. All
sir.
right, all right. So any other question? Okay. If there is no any other question, then we've come to the end of today's class. We'll continue on Friday, and I'll drop this recorded session in the group right immediately after the call. So guys, do have a wonderful night. See you guys on Friday.
Thank you so much.
All right, the pleasure is all mine.
Thank you, sir.
All right, good night.